Hi, this is Jeffrey Kurt Financial Group. Today's Wednesday, August 12, 2026. So this morning we got a Tame CPI inflation report. The specifics of it are year over year, annual CPI fell to 3.4%. From in June, that rate was 3.5. So mildly good information. Some other data in the report that was pretty good in terms of less inflation. And this is only one report. So you don't want to put a lot of emphasis on it. But I think it's important from the standpoint of where the markets were set up and also looking forward at some other bigger events. So the markets were worried about inflation and then higher interest rates via the market and via the Fed, so that this takes some pressure off. And indeed, the bond market has come down in yield a little bit. So after this report, the market expectations of an interest rate hike in September, in mid-September Fed meeting, is down to 34%. I think 10 days ago, it was at 50%. So this type of information and data are helping alleviate, pressure on the Fed to raise interest rates in September. And that's kind of a good thing for the market. Now, I don't know, next month with higher oil, although that's come off a little bit, whether the CPI ticks back up and that restarts all of the worries and like that. But right now, this is a market positive day and one event. Another situation and setup I think that's important to point out is that UBS has a measurement of the shorts in the bond market. And right now, it's a record level of investors shorting the bond market. And that data goes back to 1990. So it's a considerable amount of time and data. And this is a record positioning. So typically what that means is that the markets will move the other way, that the boat's got too many people on one side. So a short of the bond market, to be clear, is expectations of higher interest rates. You sold short the bonds, and selling bonds means expectations for lower bond prices, which equates to higher interest rates. So again, a lot of expectations for higher interest rates. We get this information on inflation that's dovish, and wouldn't be surprised to see a market rally in the bond market. And once that starts, you may get just a lot of short covering. So again, another example of positioning and market mechanizations that will be going on regardless of whatever the headlines are. A final point that I wanted to point out was that gold is up 14% since July 17. Interesting, I see gold has been acting a lot better, the gold mining stocks and like that. Not investment advice. If you have some questions, I'm happy to help you out with that. But I think it's interesting. The dollar's down a little bit. Usually the correlation is inverse between the dollar and gold. So we'll leave it there. Thank you for listening. We'll be back on Friday. Please like, subscribe, and share, and also send along any comments, questions. Yep, thank you. Goodbye.